Good evening. Welcome to the ShadowTrader video weekly for Sunday, December 6th, 2015. Crazy action over the last week, which resulted in this large bottoming tail, rather, I should say. Right? You have this just huge bottoming tail here, and I'm going to try to get this blue so you can see it. There we go. And that's what it looks like on the weekly, so I'll start with that. So obviously things do look a little bit more bullish now. But if you look at the course of the week, I mean, we just had huge sell-off on Thursday. And what really perplexed me a little bit about this, and when I show you the market profile, you'll agree that there was really nothing that surprising about it. And full disclosure, I was not doing much of anything on Friday. I had closed out some shorts on Thursday, at least the majority of them. But I'm really kicking myself now for not trusting Friday's rally more, and also not seeing that there were some factors, I think, that completely contributed to Friday's rally, mostly in the market profile that I want to get to. There were a couple of mixed signals there, but it was a question of hierarchy, of looking at one signal above another. So when I show you this stuff, if you're still not sold as to how powerful the profile is, I don't know what to tell you, because every time I miss things, I go backwards into the profile, and then I realized, like, aha, I should have paid more attention to that. Here's something that I missed. So from a technical standpoint, before we get into that, basically you have big retracement, you have trend line break, which is what happened on Thursday, and then subsequent trend line reversal back up. So there was legitimate short during the day here, but internals didn't really support it. It was too bullish. On the backside of the trend line for the rollover this way, that didn't happen. Market powered higher. And what makes this especially tricky is now this fact that you are clearly inside of this range right here. Look at how tight this was for however many days. And now you're just dead smack right back into the middle of it. So anything can happen, honestly, next week. We could fall apart. Fed funds futures, which I talked about last week, that's ticked up to like 80% now. I think it's 79 point something. I touched upon that last week. Does the market look like it wants to be bullish into that number? I really don't know, to be honest with you. And the reason I don't know is that you've just broken a short-term trend here, reversed that short-term trend. But if you look it up here, you've got this trend line to deal with and this trend line to deal with. So both of these areas would have to get breached in order for the market to say, okay, it's back to new all-time highs, and then that would put this area into play, all right? Now, let's look with a more microscopic view, and let's look deeper into these 2 days here, where you just have this enormous move down and then retracement, all right? Here's what I want to show you in the profile. This is where it really gets to like the nitty-gritty of it. So the main takeaway is that you have the 2 days preceding Friday's rally split into multiple distributions. So if you look at this right here, you've got, this is considered one distribution, separated by single prints here, right? This is another one, then you got single prints. This is a third one, and this is a fourth one. And on this day, this is one here, you can consider it the fifth one. This is the sixth one, and then down here, going down, is the seventh one, right? So the 2 days prior to Friday's rally are split into many, many distributions. And what that is it's indicative of just panicky, emotion-driven selling, and they're just hammering it down lower. And again, full disclosure, I was remiss in seeing this coming. My focus, wrongly, was here on the fact that trend line got broken. So I thought at the very least Friday would have some consolidation in this area, and then the market would move lower and retest this 2020 level. All right? But the reason that it didn't is because the poor structure here, what it did was it got people with a very short-term time frame very, very short. And on Friday, they were so short that if you look at here, you can see that the overnight inventory was 100% net long, except for a little piece here that happened near the open. But the majority of it, you can think of it as like 99% of this action here is where? It's above the settlement. So that's how you do your inventory check each morning when you want to see, like, are you above the settle, or like where's it all happening? Is it happening above the settle or is it happening below the settle? So obviously, almost all of it went off above the settle, and what does that tell you? That you have an inventory imbalance to the upside, and usually early on, you will get a correction to the downside, right? It's called inventory rebalancing. Well, on Friday morning, the market opened here, and it only corrected like 5 ticks. Nothing happened. And as soon as it went back through the open, it was off to the races. You can just see huge short covering back to the upside. So the moral of the story is that, yes, this is important. This is extremely important when you have trend line break like this. But the inventory position of the players matters more. The market is not going to follow through in that direction that it was going when things get too much out of whack. And another reason I'm kind of kicking myself for not seeing this clearer is the fact that I've seen from experience, and just from looking at this chart, you can see it over and over, I'll show you, is that the market will not continue lower in continuation when it has an inverted V pattern like this. This cannot go here. This always goes like this. You can see it over and over. When there's very little time spent between the huge moves down, the move won't continue. It has to have big corrective action. Same thing like this. You have this move here, here's the retracement, and then this move is like literally straight down after like, it only takes 4 or 5 sessions to retest. It's very, very difficult to go from here and continue lower. It's always this. You get that all the time. It's funny because I've taught myself over the years to pay close attention to this in day trading. So for instance, when I'm looking at a stock intraday, I'll see this pattern form. And I'm smart enough at this point, or maybe smart's not the best word, but trained enough at this point to never ever short this. I never ever short this break because I just know that it's not going to work because the stock has already come down, whatever, 60, 80, $1.50, whatever from where it was. I'm talking about day trading now, and it's just not going to break. So I usually either get long it or I'll wait for more sideways action to occur, and then I'll short. I never want to get short that break because I know it's a false break. But in the broad market, my confidence level is not that high, and I tend to get faked out by technical signals, or I give technical signals a lot of import. And here was a pretty strong technical signal, I thought, that broke trend. But what it didn't have going for it was the fact that you had this overnight inventory situation in the profile, right? That was just, people were just too short. And even though they had corrected a lot of the inventory over in the overnight session here, right? This was still more important, that you came down so far over 2 days, all the way from the top of the range, in very, very poor structure with single prints, single prints, just separating the whole thing. So this is something really, really important to carry forward, and I hope you guys kind of take this to heart, is that sometimes the straight technical signal is not the signal. It's more of the inventory positioning of the players. And I've said this before, you've heard me say this on Tasty Trade very often, that the inventory position of the players involved is more important than anything. The number one cause for prices to move is the simple fact that they have nowhere else to go. They get forced into a corner and then they get squeezed into the other direction. And that is especially true of this market, because this is exactly the type of market that we've had really for most of 2015. It's like they just get themselves too short, they got to bounce it back. They get themselves too short, they bounce it back. Slowly grind higher, sell off a little bit, overly long, incrementally high. It's just the same back and forth of this inventory. Probably here is your best example, this move here, where it's just 100%, one move down, 100% retracement, 100% retracement, et cetera, et cetera. So that, I think, is the most important takeaway here. I'm going to leave you with, I want to just leave it at that. I'm going to leave you with just one idea because it ties in with what I've been saying, and that is Chipotle. And I don't have any play in Chipotle, but I want you guys to watch this closely over the next few days and see if what I'm saying in the patterns plays out, in that Will Chipotle have difficulty going lower? They're besieged by bad news. There's all kinds of E. coli outbreaks at a number of restaurants, but it's just a small number of restaurants. They have hundreds more than they're having problems in. I think this is going to completely blow over. But the market doesn't like it. Friday was a very bearish day. You can see the stock continue lower. It only recovered later up to about here. And this is what I'm talking about, is that this is a pattern that to me, and again, I have no position in Chipotle, but I want to tie this in with what I just said. This is a pattern that to me is not a short. It's just not a short pattern. It's horrible. That even if the stock was to move lower and break through here, it probably fakes out and goes back to the upside. And if this stock keeps consolidating in this area, I think it's probably going to be a long. Because again, why? Price has nowhere else to go. It kind of boxes itself off in a range. It gets stuck there, and everybody in the world is expecting lower because they're believing the bad news. That's what they're focusing on. And then lo and behold, it doesn't go lower because it has nowhere else to go. So these are the insights that I gleaned from trading this week. I hope it's been of help to you. Email me at asktheshadow@shadowtrader.net if this has been any sort of help to you, if any light bulbs are going off, and we can chop it up over there. Also, look for an email, which you should have already received, from ShadowTrader.net asking you to participate in a hedging product that we're working on right now. Some of you have already purchased it at our site. We are adding some stuff to it. Those of you that have already purchased the hedging product, don't sweat. You don't need to buy it again. It's all going to be just posted on the same protected page, so you'll get all the free new updates. But what we're looking for is volunteers to help us where we can do like a live Skype call, completely anonymous. We won't show account numbers. You don't have to give your name, and see if Ryan Mastro can give you the exact instructions to hedge off your long-term portfolio against a possible downturn in the markets, either ahead of the Fed, which is coming up on December 16th, or in 2016. Depends. If you're bearish on the market, it might be a good thing for you to look into. It might be right up your alley. And that would be here at our site. It's under Premium Services, and we're just starting to build out this page, and it's called the Portfolio Protection Hedging Course. And again, what we're trying to do is we're trying to add to this. Again, to those of you that already purchased the course, there will be no extra charge. It'll all be uploaded to the same page, so wherever you download the materials before. But we did get some feedback on it, and we'd like to enhance it. So part of what we're doing in the enhancement, again, is that we're looking for volunteers who would be willing to show their portfolio panel and have Ryan Mastro do a live call with them, which will be recorded, either Skype or GoToMeeting. We'll share screens, and he will show you exactly what puts to buy to hedge that off and how to properly beta weight the portfolio, et cetera, et cetera. So if you're interested in that, there'll be instructions in the email on how to answer, or you can just, if you're hearing about it for the first time through this video, you can email me at asktheshadow@shadowtrader.net and say, yes, I would like to be considered as a participant in the hedging product, for the videos, and we'll see. We'll take it from there. We'll probably be choosing 2 individuals to be helping us along with this. So if you're a little bit nervous about long-term holdings, this is probably right up your alley. So contact us again. asktheshadow@shadowtrader.net. All right. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.